What is up, guys? Albert here. Welcome to the Bilingual Stock Market channel again. In this channel, we talk about the stock market, but we do it in two different languages, English and Spanish. So if English is not your cup of tea, you can also watch this for the same video narrated by me in Spanish. So, well, guys, we had another very tough week on Wall Street. And why, guys? Well, the main reason for this sell-off that we saw last week is that the rates of the treasury bonds have gone up. All right. And historically, guys, whenever the 10-year treasury goes above 1.5% and the 5-year treasury goes above 0.75%, the stock market sells off. This is pretty much a historical phenomenon, right? And why? Well, because since treasury bonds are considered risk-free assets, okay, because they are pretty much backed up by the US government. So the logic behind this is that as the yield that these bonds offer goes up and they become therefore more attractive, then some of the capital that is invested in stocks, which are not risk-free assets, obviously, then some of that capital would flow into treasury bonds, okay, because they become more attractive. So next week, the markets should be picking up a direction, all right, to either going into a deeper correction or maybe making another move to the upside, right? So in this video, I want to go over from a technical standpoint, first of all, the S&P 500 and the Nasdaq 100 that are the indices that you should be tracking before taking any trades. And I also want to tell you guys and also break down from a technical standpoint the 3 top stocks on my watch list for the first week of March of 2021. So without further ado, let's get started. Okay, guys, so let's get started. So in the case of the S&P 500, here we have the 4-hour chart, and take a look at these, guys. Take a look at how the bulls have held this 180 SMA line on the 4-hour chart since the last days of October of last year, okay? So this 180 SMA line is a critical support to be held in order to avoid another possible leg down in the markets, okay? And check this out, guys. If we pull up the 5-day 5-minute chart, okay, we can see that on last Friday the bulls managed to hold 37.89 as a critical support, okay? So for next week, if the bears can break this area between 37.89 and let me pull up here again the 4-hour chart and 37.90, okay, which is the 180 SMA on the 4-hour chart, we might see more downside here, guys, okay? Probably down to this red line that you guys can see over here at around 3700, which is a former resistance from December, okay, of last year, and then after having been broken, it became a support and acted as a support as well on January 29th, okay, over here of this year. So this is crystal clear here for me, guys. 3780 and 3790 will definitely define where the market is going to, okay? So if you are taking trades or you are wondering if you might buy the dip here, you have to keep a close attention to this area that I am telling you about, okay? On the S&P 500, somewhere between 3780 and 3790, okay? Critical support for the S&P 500 next week, okay? And in the case of the Nasdaq 100, and let me pull up here NDX, all right? So in the case of the Nasdaq 100, okay, which is also a very important index, guys, because it is comprised of the most important tech companies of the United States. So this is definitely a market mover. So in the case of the Nasdaq, we can see on the 4-hour chart, guys, an ultra critical level of support, okay, which is at 12,769 points, give or take, okay? So let me zoom in here, okay? And check this out, guys. 12,769 points, as I said before, give or take 12,774 points, okay? has been a support 5 times in the past, okay? And in this week, okay, it already held 3 times. So let's count over here, guys. Take a look. It was a support 1, 2, 3, 4, 5 times in the past. And as I said before, this week it held as a critical support 3 times, okay? 1, 2, and 3 times as well, okay? So if the bulls cannot hold 12,780, 12,770 points, okay, on the Nasdaq next week, we will see for sure another leg down, okay? Probably to this red line, okay, that you guys can see over here are at around 12,443 points, all right, which acted as a very strong overhead resistance over here, okay. On this was, I think this was, September of last year, okay. So guys, we are in a very tricky spot over here in the market. So if you are participating in this business, you have to be aware of the levels of support and resistance of the S&P 500 and the Nasdaq before taking any trades, okay? Otherwise, you are driving a car blindfolded and you are not in a Tesla, okay? So please be aware of the levels of support of the S&P 500 and the Nasdaq before taking any trades, okay? Okay guys, so let's get started with the 3 top stocks on my watch list for the first week of March of 2021. And the first stock that I am going to tell you about in this video is going to be Switchback Energy, okay, ticker symbol SBE, which is a purpose acquisition company or a SPAC that is going to merge with ChargePoint, okay? ChargePoint is a company that has a network of electric vehicle chargers in more than 14 countries, okay? And on February 25th, okay, the merger between Switchback Energy and ChargePoint was confirmed, okay? So the ticker symbol of this stock is going to change, okay, from SBE to CHPT, okay, or ChargePoint, okay? And therefore, this SPAC or this special purpose acquisition company is going to be a formal stock of a public company, okay? And in last week, just like it happened with most stocks out there, this stock got absolutely decimated, okay? And as of now, we find Switchback Energy or ChargePoint, okay, which is going to be the public company, but it's going to be trading in the stock market from next Monday and on. So we find here a very nice discount, okay, to take any trade or even to start a long-term position in this company, okay? And on the 4-hour chart of Switchback Energy or ChargePoint rather, okay, we can see, guys, that this stock has been a crazy roller coaster, right? I mean, this stock has been all over the place. I actually took a very nice day trade yesterday. Let me show you over here, guys. Take a look. I purchased 50 shares. This was at around 3 p.m. or something like that. So I purchased 50 shares at $28 with 39 cents, okay? Just a bit before Switchback Energy had a very nice run up. And I sold those 50 shares at $30 with 47 cents, like 15 minutes after that, at $1,523. So I purchased my 50 shares at $1,419, and I ended up selling those same 50 shares at $1,523. So I ended up making a very nice profit of $104 in a matter of 20 minutes, okay? I took a very nice day trade on Switchback Energy, okay? But going back to the 4-hour chart of this stock, okay, and let me zoom in here, guys, okay? Because if I zoom in on the 4-hour chart, we can see obviously a very nasty chart, right? And obviously, Switchback Energy is trading below the 180 SMA line and the 50 SMA line as well. The RSI is at 38 points, okay? So SBE is in oversold territory. And if next week, guys, we see SBE or SharpPoint, okay, paying a visit again to this red line that you guys can see over here at around $28 per share, which was my entry price for the day trade that I took yesterday. That would be a screaming buy, in my opinion, for any trade, okay, or even to start the long-term position in this company, okay, in SharpPoint. Or on the flip side, if we happen to see a recovery on this stock, and whenever it approaches the 50 SMA line on the 4-hour chart at around $35 per share or $35.50 per share, this could very well be a momentum play, guys, okay? So if SharpPoint happens to break, okay, this overhead resistance at around $35 or $36 per share with good volume, we could see it climbing up to $39 or $40 per share, no problem, guys. So Switchback Energy, or SharpPoint rather, is definitely extremely attractive, either at $28 per share or on the flip side looking like being about to break $35 or $36 per share, okay? So keep a close watch on this stock next week, guys. Remember the new ticker symbol CHPT, SharpPoint. Okay guys, and the second stock of this video is going to be Nndm Technologies, ticker symbol Nndm. And in the case of Nndm, this is another small cap stock that has gotten absolutely decimated during these last 2 weeks on Wall Street, okay? And for those who don't know about Nndm, well, Nndm Technologies is a company that focuses on the research and development of 3D printers and nanotechnology. And when we talk about nanotechnology, we are talking about a technology that consists of the manipulation of materials on a molecular scale, which is a technology needed to build microscopic devices, okay? So this is a disruptive company that is trending as of now on Wall Street and that seems to have a great future ahead of themselves. And that, of course, that we find as of now at a very nice discounted price, okay? So in the case of Nndm, guys, and if we check on the 4-hour chart of this stock, we find another nasty chart, guys. Take a look at this. A horrible downtrend over here. The RSI is at 31 points, and as of now, Nndm is trading below the moving averages, okay? The 50 SMA and the 180 SMA line, okay? However, this is an opportunity, guys, okay? And as I said in the video that we posted on last Thursday about what to do during a market crash or in a major correction of the markets, check this out. Nndm is trading as of now something like 52% of its highs, guys. Okay, so in the case of this stock, this was a crash. This stock clearly crashed, you know, during the last 2 weeks. Or on the flip side, we can say that because of this crash, we have a great opportunity here, guys, okay? A great opportunity to buy at a discounted price a company that has a great long-term potential. And please remember, guys, that I am not a financial advisor, so if any of you wants to either trade or invest in Nndm, you have to do your own research work and reach your own conclusions. But in my case, I actually own 150 shares of Nndm as of now at an average price of something like $13 per share. So in my case, if next week, and let me zoom in here, guys, if next week I see Nndm keep on consolidating at around this red line that you guys can see over here, at around $9.50 a share, I might buy more shares in order to average down my current position on Nndm, okay? Because check this out, guys, $9.50 a share, give or take, has been a very good support for Nndm several times in the past, okay? And especially during the last trading sessions, so anything in this ballpark is definitely a buy, okay? Or if we see Nndm running to the upside and breaking this upcoming resistance at around $10.38 a share, where you guys can see this red line, or $11 per share, give or take, Nndm could be off to the races definitely, right? Maybe climbing up to the moving averages, okay, on the 4-hour chart at around $13 per share, okay? So Nndm, guys, keep it on your radar for the first week of March of 2021. Okay, guys, and the last stock of this video is going to be good old Walmart, ticker symbol WMT. And in the case of Walmart, guys, I actually picked up 50 shares on last Friday at around, it was like $130 per share. And Walmart fell like a brick, guys, on February 18th after having reported worse than expected earnings, okay? And we have, as of now, a very nice discount on this stock of 17%. As of now, Walmart is trading 17% off its highs, okay? And guys, since we are dealing as of now, okay, with quite a volatile market that doesn't seem to be for the faint of heart, Walmart, in the current conditions of the markets, is a very safe play, you know, because we don't know at this point in time if we are going into a major correction or not, okay? So that's why I am telling you guys that Walmart, even if we enter into a deep correction of the market, Walmart is quite a safe play. And why? Well, because if, as I said before, we enter into a major correction, okay, say 10% or let's say a 10% drop on the S&P 500, Walmart won't drop as much as most of the growth stocks will. Okay, because keep this in mind, guys. Whenever the market has a pullback, growth stocks and speculative stocks are the ones that get hit the most. Okay, so in a moment of market volatility, okay, like the one that we are going through right now, a stock like Walmart offers two basic things, guys. First, peace of mind, because I said before, if the market happens to pull back too much, Walmart is going to pull back way less than the market as a whole, all right? And we find a very well-established company like Walmart, one of the largest companies of the world, 17% of its highs. So for me, remember that I am not a financial advisor, this is a huge and great opportunity, okay? And check this out, guys. The RSI of Walmart on the 4-hour chart is at 20 points, almost off the page. So Walmart is, as of now, absolutely and extremely oversold, okay? And I could be mistaken, okay, because anything can happen in the stock market, but I don't think Walmart can go further down over here, guys. I don't see Walmart going lower than $130 per share, okay? And as I said before, I already opened a position over here at around $130 per share, okay? And why did I started a position on Walmart when Walmart has this ugly chart from a technical standpoint that you guys can see over here? Well, because this is a company that I like a lot. I actually shop at Walmart, okay? I do my groceries shopping at Walmart, and we have a 17% discount, guys. And as I said in the video that we posted on last Thursday about the market crash, about what to do during a market crash, you find very good prices when there is fear out there, okay? And Walmart is a perfect example, all right? So I purchased 50 shares, okay? And if Walmart happens to drop a bit more, I am actually going to buy more shares, okay? Because here we have a massive and a great company being offered at a 17% discount, okay? So Walmart, guys, somewhere around $130 a share is a screaming buy in my opinion. Okay, guys, and before ending the video, I don't know what is going to happen with the markets next week. Nobody knows, okay? But if we happen to keep on dropping, okay, if we actually go into a deep correction, okay, of the stock market, please don't freak out. All right, please stay focused. And I want to tell you guys something that I heard from Warren Buffett, okay? He said in an interview that I saw like a year ago or something like that, he was asked, like, hey, Warren, what are your most basic rules when it comes to investing in the stock market? And he said, I have two basic rules, okay, that I always respect. My first golden rule in this business is never lose money. And my second golden rule is never break the first rule, okay? So please stay focused, don't take unnecessary losses, don't freak out, keep calm, and buy the dip, okay? If you found value in this video, please hit that like button for me and consider subscribing to the channel if you haven't done it yet, and follow us on Instagram at Bilingual Stock Market. We are posting news and information on a daily basis on our Instagram account. And remember, this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in two different languages, English and Spanish. But most importantly, the YouTube channel in which we know that the wonderful world of Wall Street, it's not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you in my next video. Peace out, stay focused, don't take unnecessary losses, keep on crushing the markets, and stay green.